Ladies and gentlemen, if you're confused what's going on today with Tesla stock in the broader markets, well, I don't blame you. There has been incredible volatility today to the upside and to the downside. You got this downside just out the blue fall here, this huge rally here, this almost 0.25% downward candle at the lowest end of this wick. This was like 1/3 of 1% down 1 minute candle. Like, that's insane. Okay, you bounce back, you crash again, you bounce back, you fall again. What is going on today? Tesla stock at one point was also up over 1%, and now it's negative. Sometimes it's changing minute by minute. We do also have some Tesla stock news that I will share with you. I will share with you the option activity in Tesla, the short positioning in Tesla, and your sentiment barometers around Tesla. Do investors feel bullish or bearish on Tesla stock? First of all, we did get core PPI month over month that came in at 0.3%, but last month was revised down from 0% to negative 0.2%. So if you really are looking at a month over month reading here, this actually came basically in line with estimates if you consider last month's downward revision. If you don't, well, we were expecting core PPI around 0.2%, and you came in a little on the hot side. So depending on who you ask, you're gonna, hear PPI was a little hot or PPI was in line with estimates. I think it was more in line with estimates, and it really didn't cause any move today in markets because of that. Now, you also had initial jobless claims that were revised up from last week, 227,000 to 228,000, and we did come in at 230,000 today. So a little bit of a climb here for initial jobless claims. That really didn't move markets at all either. You did have continuing jobless claims that were also revised up about 7,000, and the number that we got today was 1.85 million. So coming in a little bit on the hot side there, but I don't think Wall Street really cares about this because it's not getting dramatically worse. It's kind of just plateauing around the same level that we're at now. We do have some economic data coming out tomorrow. We'll cover that more in the next video. But retail sales is really going to be the next big catalyst for our markets. And that comes out on Tuesday, September 17th, the day before the first Fed cut on September 18th. And the Fed's going to be cutting rates next Wednesday. So I would say overall today, the data was a nothing burger, and we're just kind of going off of what we did yesterday, where some big tech stocks like Nvidia are continuing to lead our markets. And this is where things get a little confusing as well, because some big tech's doing well, some is not. Nvidia is up 1.5%, Google's up 1.5%, and Meta's up 1.5%. Microsoft's down 0.5%, Apple's down 0.25%, and Amazon, well, is barely positive. You also have the equal weight S&P, the RSP, that is only up 0.1%. The Russell 2000 is outperforming today, up almost 1%, which is strange in the context of Tesla, because your Russell is that risk on trade. Your Russell is your Fed cutting rates trade, and so is Tesla. But Tesla's not playing along today. Yet at the same time, the Russell 2000 is trading on this risk on kind of, narrative today. The whole Fed cut playbook is coming back a little bit. 10-year Treasury yields are up 3.5 basis points. So we're pricing in a less aggressive Fed cutting cycle slightly today. And we're getting the Fed cutting risk on playbook. Like, it just doesn't make a whole lot of sense. The markets are now only pricing in a 12% chance that we get a 50 basis point rate cut next Wednesday. And they're pricing in an 88% chance that we get a 25 basis point cut. Now, the data tomorrow could affect this. I don't think it will as much, but retail sales on Tuesday could give this a big swing. It could, if retail sales are negative, actually swing the odds more in favor of a 50 basis point cut. So that's going to be extreme volatility to really start off next week. Here on the day today, the percent of stocks currently trading above their 50-day moving average is at 47.3%. So 2% of all stocks today are breaking above their 50-day moving average, which this is not like a great day, but it's not a bad day at all. It's actually a pretty decent day for generalized markets. Although if you're looking at the RSP, the equal weight S&P that's almost red, Tesla down 1/3 of 1%, it doesn't seem like a very good day. But again, I think it's some of that Nvidia and big tech effect. If Nvidia was flat or red today, Meta, Google were flat or red today, markets would look a lot worse. This is just part of the volatile, messy September game plan. I think this is part of the, pre-Fed rate cut jitters that we are getting. Certain sectors are loved one day, hated the other. Other sectors are loved one day and then hated. It's kind of the typical pre-Fed cut playbook. We also seen the same kind of thing in 2019 before the Fed cut rates. It was certain sectors were loved one minute and then hated the next. But the only thing that will really matter heading into the first Fed cut next week and over the subsequent coming months is what the economy looks like, what the economic data is telling us. Because if you're looking at the SOM rule or you're looking at the 2 and 10 yield curve uninversion that is uninverted, these are both recession indicators. These are both 100% foolproof recession indicators. Now you've kind of started the stop clock, right? Where Wall Street's like, okay, anytime now, we're going to start going into a recession. And I think Wall Street's going to be very akin to that and keened into that until we get that definitive soft landing or hard landing. And from that perspective, each and every single piece of data that we get revolving the economy is going to be seen as a major catalyst for markets. Thus, it will be a major catalyst for Tesla stock. And the better the data, the better Tesla stock and broader markets will do. And I think today we're getting a lot of chop in markets with a lot of volatility because we didn't really get any big data. PPI, came in line with estimates for the most part. Initial jobless claims did not really go down a lot. It really didn't go up a lot. Slightly went up a little bit, but not enough to draw the conclusion of, are we going into a hard landing, soft landing? We're kind of just in purgatory again. And I do think with September seasonality in play, that's just going to mean more volatility. And I think you're seeing that today. Now, on a positive note, if we take a look at option activity in Tesla stock today, you have seen 21 different trades totaling $6 million with a positive order value of 94%. Hedge funds and institutions are very positive on Tesla stock today. If we take a look at Tesla's short interest of free float, you are falling yet again. Shorts are continuing to cover on their short positions, which is a great sign because Tesla stock, yes, has been very volatile recently, but generally speaking, shorts have been covering as Tesla stock has been falling, which is something you don't normally see in a stock that Wall Street's bearish on. In a stock Wall Street's bearish on, we've seen this time and again, you'll get a stock that's down 90% with 80% short interest, 50% short interest, right? They don't cover on the way down. Tesla, they're covering on the way down, and I think that highlights some of the perceived soft landing notions that we have out there, because if Tesla's falling and you get a better chance to cover on your short position at a lower price, if we do ultimately have a soft landing, Tesla's going to do very well, and you probably don't want to be short in Tesla. So I think there's part of that going on, and I think overall with the Robotax event on October 10th, with what will be multiple Fed cuts that will help Tesla's profitability, these are also reasons you probably wouldn't want to be short in Tesla. Nonetheless, again, short interest of free float 2.84%, which is down from about 2.96% yesterday. So quite a big drop there. You have about $18 billion currently sold short in Tesla stock, totaling 78.8 million shares that are sold short. Here today, you do have return shares of 170,000 and borrowed shares of 435,000. As far as Google Trends data, it looks like the entire Tesla lineup is falling a little bit with search trends. The Cybertruck going from 55 to 54, the Model Y going from 24 to 23, the Model 3 going from 23 to 21, the Model S going from 10 to 9, and the Model X staying down here at 8. As far as sentiment in Tesla stock, it's actually improving today compared to yesterday. You are bullish today at 66. Yesterday, you were bullish at 64. So even though Tesla stock is slightly down, about 0.5% at the time of recording this video, sentiment is improving today, which is a really good sign. Message volume is a little bit lower today. Yesterday it was high at 56. Today it's normal at 54. And the participation ratio today is high at 55. We do have a new AI investor sentiment survey that just came out yesterday. Bullish investors at 39.8%, neutral investors at 29.3%, and bearish investors at 31%. George Holtz on X says, at a given time, resources are finite. Efficiency determines when we unlock AGI, space colonies, and radical life extension. Elon Musk says he thinks about that frequently. It's also being reported that Elon Musk is expected to visit China soon, and presumably this trip is going to be about FSD, considering we are expecting FSD to launch in Q1 of 2025. Actually confirming when FSD launches in China is going to be another big catalyst for Tesla stock. We are also expecting FSD to launch in Europe in Q1. Europe might actually be a little bit harder to get the regulatory approval, so it wouldn't surprise me if that's a little delayed, but China could come at any time. China seems more open to adapt to new technologies compared to Europe. And China has strongly advised its car makers to make sure advanced electric vehicle technology stays in the country, even as they build factories around the world to escape punitive tariffs on Chinese exports. Beijing is encouraging Chinese automakers to export so-called knockdown kits to their foreign plants, meaning key parts of a vehicle would be produced domestically and then sent for final assembly in their destination market. Tesla has slashed the number of Cybertruck wrap options to 3 from 11 previously, and they cut availability in Texas. And in Tesla's second generation 4680 battery cell, Tesla has reduced the amount of cobalt by 57% versus the first generation 4680 cell, according to a chemistry analysis at the limiting. This is an X account. China has released a Model Y rear canopy in China for only $99 US, which actually seems like a very good deal. I mean, hopefully this comes to the US. I think that could be a pretty popular accessory option. Now, on a technical basis for Tesla stock, you are above that 50-day moving average at about $224 per share, at least at the time of recording this video. That means Tesla's looking pretty good here. It wants to break out to the upside, but I think you need something of support to help make that happen. I think you need some good economic data. You need a strong retail sales report. You need the data coming out tomorrow to show consumer confidence is potentially picking up, that current economic conditions are not as bad as feared, at least thought by the public. And I think Tesla stock really wants to break out here. Heading into the October 10th Robotaxi event. I do think in the broader markets, you're somewhat limited on valuation. I think valuations are high. I think and earnings estimates are very high for 2025. At this point, you're almost priced for perfection, and I think that's part of what's keeping a little bit of a ceiling, if you will, on our markets right now. But I think certain stocks and sectors can do very well, even without the markets generally participating. If we do get good economic data, I would expect a more broad-based rally that could send Tesla stock into the 300s. Before or shortly after potentially the Robotaxi event on October 10th. You could see small caps, cyclicals, value, interest rate sensitives, put it more broadly, like a Tesla, really outperform. At the same time, big tech sells off and doesn't do as well. And maybe that would mean limited upside for the S&P, but in that scenario, Tesla could do very well. That's kind of my expectation if we do get a further risk on market. I don't think the S&P is going to be risk on. I don't think the S&P has too much upside from here, but I do think a stock like Tesla could have a lot of upside from here. And on a technical basis, with this short-term cup and handle formation that is fully formed now, and the fact that you're still just staying above your 50-day moving average, it does suggest that the momentum is to the upside for Tesla stock. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.